So thanks all for joining us today. My name is Ayla. I'm the COO of Diffuse. We are a suite of digital asset hedge funds. Basically run an index fund and two DeFi funds, amongst other things. And it's probably also why they asked me to moderate this panel. I spend all of my time investigating and looking for interesting new investment opportunities in the crypto universe. But I'd love to start off with just a quick introduction of each of you so we can frame the conversation a little bit, and then we'll take from here. Chris, do you want to kick us off?
Sure. Hi there. I'm Chris Gale. I'm the CEO of MetaEdge Ventures. Been in the crypto space since around 2017, where we've been building successful projects, and last couple of years been more focused towards the investment side, investing in interesting Web3, NFT, and blockchain infrastructure projects. Very happy to be here. I'm based in LA at the moment, but you could probably tell I'm originally from the UK with my British accent.
Wonderful. Maria, do you want to take it from here?
Yes,
the other one.
Of course. My name is Maria Pia Akevecchi. I'm Chilean. I live in Italy. I'm an economist. I'm also, I have a master in public policy. At the same time, I'm an expert in finance and financial sector. I have been board member of different companies, tech companies, even a pension fund administrator company. And I'm CEO and founder of Machiavelli & Co. We advise on strategy on digital assets. I have been in this space, in the blockchain space, for more than 4 years, working even with the Blockchain Research Institute that was founded by John Tapscott. And I'm very happy and thankful. Thank you for the invitation. You know, it's very interesting to be with these amazing colleagues on and speaking about Web3 and the metaverse.
Thank you so much. And last but not least, Justin.
Hi, everyone. Thanks for having me. So I'm Justin Bannon. I am co-founder of Boson Protocol and a number of other kind of applications connected by Boson. So Boson Protocol is this basic primitive in blockchain enabling smart contracts to connect with real world commerce without an intermediary. So you can think of us as kind of like a bit like what Amazon does, but without an intermediary in the middle. And on top of that, sort of deep tech, which is being built by about 60 of the best kind of people in blockchain. We have, you know, we're building a number of applications, including in the metaverse. So we bought the, at the time, largest piece of real estate ever in Decentraland. And on that, we've built Boson Portal, which is this kind of gamified, immersive commerce space. And we're just onboarding loads of brands into the metaverse to enable metaverse commerce. And then we also have a loyalty application, which has just been picked up by MasterCard on their global crypto startup program. So yeah, we're sort of at the forefront of deep tech and cool tech and latterly mass adoption.
Beautiful. Awesome. I'm quite excited for this conversation, especially because there's been such a buzz about Metaverse Web3 in the last year. I think 2021 was the year where the skeptics asked themselves, is the Metaverse just a fancier second life, or is it something real? Is it going to be here to stay, or is it going to fizzle away the way that many other bits and pieces in the emerging tech space does? Now, I think for this conversation, I'd love to frame our conversation around 3 core topics. Opportunities that are in the space that ideally people haven't heard of. You 3 are the experts, so you definitely have more access to insights than most people wandering around a regular life, let alone our fancier version of Second Life. Then the second bit is around risks, both from an investor perspective and also from an individual participant's perspective in the metaverse, and how that kind of can affect someone's actual day-to-day existence or an investor's capital allocation results at the end of the day. And the last bit is around trends. What do you guys see coming up this year and the next few years? What are the bigger challenges that this movement and this change in our communities will actually have for the longer run? So these are the 3 main bits that we're going to be talking about. I'll kick us off with the opportunities. So when we look at the metaverse in and of itself, what is it and what problem does it really solve? And maybe I'll poke on you guys individually. Chris, I'd love to hear your view on this. What is it? What is the metaverse really, and what problem does it solve in your view?
Sure. Well, there's a big question mark to really when the metaverse came, because see, the original term was written in Snow Crash back in the 90s. But I remember flying around Second Life, a number of years ago, which was a very early version of the metaverse. But even before then, early stage internet, there were lots of chat rooms with 2D displays of what defined as the metaverse. So really, why I believe that it sparked so much interest and become so top of conversation, apart from Mark Zuckerberg's plans and rebranding Facebook, which has obviously had a huge impact. But really, it's the core value of tokenizing digital assets, which then create this open metaverse world where value can be created, and that is creating huge network effect and huge impact. And how that overlaps, for example, key case study is what the success of Axie Infinity at the moment with play to earn gaming, and how it's surprising VCs, traditional investors are just blown away with the actual scale and impact of user adoption. And as soon as you start assigning value into people's lives for paying for attention, gaming, however you want to explain it, it brings mass adoption. And now a huge proportion of Filipinos are playing day in, day out, because they can now generate more income in these game experiences than they can do working jobs that are available in these markets. So that's really been a huge opportunity. It definitely does come with some risks that I'm sure we'll get into later on, but that's really how we're seeing the metaverse at the moment, is this world where users can come in and it's NFT backed. It's integrated into cryptocurrency where value can be generated, and that's creating huge opportunity for brands and huge opportunity for commerce. And that very much we, MetaEdge, are following what Justin's doing at Bozon, and we were an early investor in Bozon, and very much supporting the impact there, as well as then we're speaking day in, day out to big brands, Fortune 500 brands that are now coming in wanting to play in this space, whether it's from a brand and relevance point of view of staying relevant to this next up and coming generation that are very much connected to the metaverse, or whether there's revenue opportunities and new revenue line items that can be generated, which are being discovered through early case studies that are coming into the market now.
That kind of hits an existential question, which is, do you think that the metaverse will replicate or duplicate economic activity? Is it moving from other mediums into the metaverse, or is this kind of a second source of economic activity? Justin, what is your thinking around that when you look at especially kind of brand engagement with the metaverse? Is that in addition to or in replacement of?
I think, I think the future is going to be different. And I think it's going to be this kind of, instead of metaverse and universe, it's going to be this kind of like omniverse. So we're seeing with humans that, everyone has a digital shadow. It's unusual and uncool not to have a LinkedIn profile, right? And we're seeing that now where, for brands, we've gone within 6 months from what's that to we have to have it, right? But we have to sort of jump in. And I think over the next year or two, it's going to become almost like a hygiene factor for certain types of physical items, starting with fashion, to have like a digital shadow. But we're also seeing like large shopping mall kind of companies, like, for example, wanting a presence in the metaverse, and everything is moving towards this kind of blurring sort of metaverse universe, like an omniverse, and this whole kind of digi-physical concept of an asset. And that's, Boson Protocol is you can think of it as this kind of connection between the metaverse and the universe, where you can sell physical items as NFTs in the metaverse, and you can also sell these digi-physical items. So a pair of sneakers that's a physical item with a wearable, and And we just see this merging of those two universes, whether you're immersed in a metaverse and you're buying and exchanging physical assets and experiences, or whether you're sort of in the universe with some sort of an AR overlay that's you know, you see someone with a handbag you like and you click on that, and using this crypto infrastructure you could buy that trustlessly with no intermediaries. So I completely agree with all of what Chris has said also about property rights and crypto infrastructure being the basic fabric of the metaverse.
You touched on a really important point, which is the infrastructure component. So much work has gone into that even being possible. Anyone who's been involved in DeFi, for example, that if we run two DeFi funds with very scraggly infrastructure for a very long time, everything feels like it's held together with duct tape and barbed wire. And I'm really curious, Maria, you might have some thoughts on this. What does infrastructure really mean in this space, and how has it started to come together? What have we learned over the last even 9-12 months since we've started engaging with this on a kind of a global scale?
Well, first of all, I think that I want to say that I couldn't agree more with both of my colleagues. And in compliment and replying to your question, also I would like to say that the metaverse is going to help people that is not very close to crypto digital assets or tokenized assets to understand much better how it works. Because you know what happens is crypto in general, still cryptography, it's a very, I would say, back, concept. But in the metaverse, when they see they can trade and they can see this different way of tokenization, they can buy a square meter in the metaverse and they can trade it. In some way or another, as they can see the interaction, they help them to understand a little bit more on how this token economy could work. And that, I think that is very, very good. In terms of infrastructure, I think that we still have a long way to go, okay? And we have a long way to go, and not just in Web3. We are talking about deep tech in general. Now we need this convergence, and we also need technologies. And at the same time, we need each technology itself to keep evolving, so then we can keep having a better infrastructure and that we could do much more. For instance, something, the metaverse that Mark Zuckerberg showed us some few months ago, it's something that probably we will be able to have it in some years to come, but not yet, at least not in a massive way. And and at the same time, in terms of infrastructure, there's still a lot of security that we need to assure, and that is also part of the risks. But and we need to understand today that and be aware that in Web3, okay, we're not in Web3. We kept on going with some issues from Web1, okay, like digital identity and some things about cybersecurity. So we need to make sure that in the metaverse, we incorporate these kind of layers, especially because now we are going to trade real assets. And this is going to make, the new generations, this kind of interaction is going to make it very, very easier, of course, to new generation, that for them is easier because they're digital natives. But also it's going to be easier for them to teach their parents or their grown-up families on, opening their mindset, on understanding that also the design of an economy, the design of a society can be different. And this is very, very important because also we need to be aware of the governance of each metaverse. It's not the same thing, Decentraland, that a metaverse like that is too centralized and they kept all our information or things like that. And as I spoke before, this is very, very interesting because then also in this metaverse we can learn in these different designs. We can also learn on how DAOs, decentralized autonomous organization, incentives using, digital assets could work. And we could take those lessons also to the real world, because the point is that we need to understand first that with Web3, we have, for the first time in history, we have the opportunity to transfer real value. And, the world, finally, everything, productive processes, the economy, society, institutions in general, everything depends, or in some way or another, have a structure that they have a structure that depends on how the incentives in that society has. So we have, for first time, thanks to blockchain technology, we have the first time to redesign that, the way we share value. And the metaverse is the perfect space to start trying those new design, and that people could understand, because it's going to be it's like a game. People think it's a game, but they see the interaction. I think it's very, very interesting. That's why I think that the central, I think that the success of the Decentraland also has to do with that allows their users to, have a voice on the platform. And
I suppose
that also changed the mindset. Yes, Chris?
So just a very interesting point there, but I suppose defining success at the moment is still very early. So you said that, the success of Decentraland, I still think that this is very much in a petri dish as an experiment, and a fraction of the global population are actually interacting with a world like Decentraland, and there's still a lot of learnings that we can take from that.
Of course, it's a process.
Agree on,
but it's there. It's a process in a controlled place, where we can do that. Because what happens in real world, we have organizations that has nothing to do with the design of economy that we can create with Web3. But in this metaverse, we can. And what happened when I say the success of the Decentraland, I'm just comparing with other metaverse that they haven't worked on those things. But once the people get used to that, they can have a voice. That as user, they can also have a voice. This will also change their mindset. And it's not saying that the Decentraland will lead always, just that. Also, we need to understand that one of the I would say DeFi, that is what DeFi also is different. DeFi, what gave the users, gave a voice to be part of. And that's why, today fan tokens are so, are of the interest of, for instance, in the Paris Saint-Germain, the followers of this soccer team, they are exploring, but for the first time. And when they get used to, they will be aware that we can create a new way of corporations, institutions, and we are just in the beginning. That's what we were talking. We are now. This is something to come.
Yeah,
we are exploring this right now.
I think what you're hitting on, and maybe I'll summarize the kind of three really smart points that you all three made. Metaverse is really an on-ramp for the general public to get involved with crypto. In a nutshell, and it's really it's the first stepping stone for us all to become part of this ecosystem. The other beautiful part is that general commerce and commercial ventures, period, brands, etc., that are really close relationship to the individual consumer have a space that they can call their own. Nobody really knew how to do that when we just talk about lines of code. It's completely unrelatable. And then the last bit that you mentioned, which is this infrastructure that is built or starting to be built underneath this new world of ours, can actually enable us to participate, not just as a user, but also help us direct it, obviously, as a layman that's not writing code, and all the holes and gobbles of things that are wrong with every DAO that I've ever seen so far. It's still a beautiful starting point for a completely different way of imagining how we spend our time, both in the real world, as just mentioned, but at the intersection of the real world and the metaverse. And that really leads us neatly into all things risks, I would say. Justin, I'd love to hear from your side. What have you seen have been some of the issues in the metaverse from just say when you do due diligence on the work that you do, whether it's engaging with partners or the code that you write or even bring employees on board? What are some of the risks that you've noticed when you kind of kick off new projects within the metaverse?
Yeah, I mean, on risks, what I would say is, I mean, fundamentally, what Boson Protocol does is it eliminates counterparty risk in transactions. So you could be wandering around in the metaverse and meet an avatar that, you know, is kind of pseudonymous, anonymous, and do a transaction with that avatar for some real world item, be it a physical piece of art attached to an NFT or whatever. And Boson Protocol gives you these trust assurances that either you get that item to the agreed upon quality or your money back. So kind of linking to that previous point on infrastructure, yeah, I mean, there's massive counterparty risk without identity and in these sort of decentralized systems. And so we provide this piece of infrastructure that enables sort of safe commerce within that environment, which, you know, which is sort of massively important. So that's kind of one way that we reduce risks. But you know, I would say for a lot of the brands and, you know, that want to get involved, there's things like kind of technology risk. Yes, there's regulatory risk because the tax, particularly when you're buying and selling physical items via NFTs, or, you know, there's lots of tax and regulatory risk there. And that does become a bit of a barrier. And increasingly, we're offering these sort of services to brands where it's kind of like a package service that helps them get into the metaverse. But I think overall, all of these brands now and just see the risk of getting left behind. Everyone has gone through web and mobile, and they know how it re-rolled the dice in terms of market share. You know, there were companies that just died because they didn't adopt web or mobile. There were companies that just became global category leaders. And so this time, everybody knows that dice is being re-rolled. So I would say personally, the main risk, and you know, it's pretty unanimously held, is of getting left behind. And that's why you're seeing this wave of mass adoption.
Beautiful. I think that's probably the quotable thing of the session today. The biggest risk of the metaverse is being left behind. Chris, what are your thoughts on this topic, especially when you start new projects or when something really emergent kind of comes across your desk? How do you do due diligence on these projects? How do you make sure that just the baseline security protocols are met of some way, shape, or form, or is it the opposite? Does all that kind of hamper the progress and the innovation that's possible in this space?
So from leading on from what Justin was saying, I think there's another viewpoint of how do we adopt as a company from Web 2 to Web 3 as a traditional company. Now, we talked about the evolution from Web 1 to Web 2 to mobile, but that was very much an evolution. It was a technology improvement based on hardware, based on device technology. Whereas what Web 3 is doing is really redesigning the core design of a lot of these companies. So where tokens become value on a balance sheet of a traditional company versus equity. So where we spend a lot of time is speaking to the CFOs of publicly traded companies, scratching their heads, wondering where they can, how do they account for this? How do they communicate certain aspects of this token design? How do they hold digital assets on their balance sheet? Whether it's from buying land in the metaverse as a brand, or that can be quite overwhelming, when they're used to just dealing with third-party vendors and agencies to do all the work for them. Now they're looking at how to account for that asset. Moving on from that, it'd be quite interesting to look at on the consumer side of all of this, because we talked about play-to-earn gaming and the metaverse and really the enticing pull into this world where now, instead of just getting digital coins that are useless within this game, now I'm getting something that has real world value and I can trade for other assets and turn into real currency. And where that gets interesting is the token design. And what we've been seeing is more and more of a land grab, or more and more of a design to build community impact and community effect. So this sees two different, when we're doing due diligence on companies, two different ways of playing out. And the first is that the VCs and more traditional VCs of Web2 have become less valuable or critical in building out some of these projects, which are more developer-led, raising money from the community of players, which then doesn't require tens of millions, hundreds of millions of dollars to be raised via VCs in Silicon Valley to then build, to then launch. And the second impact is the traditional raise process of doing seed, Series A, Series B, Series C was pretty much down to then building a user base. So whenever you get your first 500,000 users, you go and do another raise. A proportion of that raise goes to spending money on Google and Facebook to then acquire your next million users to double your valuation, rinse, wash, repeat until you go to a path to a public market. Whereas now you're seeing a very, very different means to enable a company like OpenSea to go from 0 to a $14 billion valuation without requiring all of that process, or Axie Infinity we talked about to get to the significant revenues and user base. But the risk to all of that on the community impact is the economy has been designed to benefit early participants. So if you get in early, you can get the NFTs cheap, and then you start playing the game. You can generate coins, you can stake coins. The longer the economy grows, you're hoping that that's going to grow, and you can sell on to the next one. But the risk to that could play out is, and what we're seeing in DeFi is that it becomes first mover advantage to the masses, where the spike of success can go from 0 to billions of dollars of valuation back down to 0 very quickly, as the next Axie Infinity comes along and offers much more value in their game, which they will then immediately suck value out. And we saw this playing out in real time in the NFT marketplace world with LuxRare and Lux token airdropping to Axie to OpenSea users, which then flipped the volume of NFTs traded overnight out of nowhere. And so this creates an unstable, in a way, business landscape where it's very, very hard to value companies in these companies, given the ease of access, the speed of growth between communities. And the final point is what Web3 offers is much easier, less barriers to entry for users to move between games, because we're just using Web3 Wallet Connect. We're not signing up and filling in long, giving away a lot of our data into a lot of these Web2 companies. We can then just transfer assets and move into the next game very easily, very quickly, which then can create this volatility in user base.
And that's a beautiful point, actually. This interoperability between, or for the individual to be able to smoothly move between these ecosystems, also means that you're almost rewarding projects or companies for taking massive risks, right? Because just to acquire this user base, where that's kind of over leverage themselves in one way, shape, or form, or not spending the time and effort required to take care of security, etc. Because net something may or may not go wrong, but you're only going to fly for a few months. So do you really need to go and build that massive infrastructure under your project? Maybe not. Maybe it just needs to kind of work just to attract the first round of users. Something that we've observed as well, especially in the DeFi world. Maria, and you touched on this earlier, in terms of DAOs and how that also affects it from a security perspective. It would be lovely if all these things just ran themselves and people can make decisions on their own and no centralized force is required. But what do you see at the moment being kind of the holes in the emergent technology of DAOs? Is that already kind of up and running and legs moving healthily, or are we still on our knees and trying to make this work? Is it still very early stage? What are you seeing in the world of DAOs and in terms of risks that are present at the moment?
Yeah. Now I'm on. No, first, remember what I said before. First, DLAD, that's a delayed entity that that Justin mentioned, and that is something that we have been lacking, since the internet, the era of the internet, and that is very, very risky. And that's important to say because, in all what we are doing, not all, I would say few times, these new startup companies in the Web3, they start with these kind of elements, with standards that can, in some way or another, protect the user. And in terms of DAO, I have seen, to be honest, very different things in terms of very good intentions sometimes, but not really having we would say a clear governance on how to make money of it. And in others, I can tell you that I have seen very, very interesting ideas, for instance, on how to create a pension fund administrative company by design it as a DAO. Okay, and so it's very interesting that there's some few people that they're also thinking how they can in some way or another improve the design of real corporation and real, I would say, global challenges, because pensions it's a problem worldwide, So, and how these DAOs, pension pharmaceutical companies designed as a DAO, they could be much more efficient and also, reduce costs related with management. I think that those are the kind of interesting use cases that I have seen. Also because, if, for instance, in this case that I'm talking to you, where if you create, for instance, a DAO where also the users or investors, they can have a voice on certain topic, that could be also that is very, very important. I come from Chile. In 2019, we had a social disruption. And I can tell you that one of the main topic of anger of the society is still pension funds, okay? And even some, even the elected president, in some few months ago, proposed that, someone that is a client of the pension pharmaceutical company should be in the board, okay? And also I can tell you that I was part of a pension pharmaceutical company that we built as a scratches, like a fintech, as much as we could because of the regulations. So I know the challenges of this kind of financial institution, and it was very interesting to see how some students from DAO education, that they teach about these DAOs in Spain. Some students were thinking on how to solve this kind of issue in a very, very intelligent and effective way. They still have been just in terms of concept, not really being built. That there's always the second phase of or challenge ahead. But just having people redesign this kind of institutions and financial institutions that also affect all of us in some way or another, I think it's amazing. Very, very interesting indeed.
Yeah, Justin, go ahead, please comment.
Yeah, I mean, sort of I seem to be making a lot of contrary points, like the risk of not being involved in the metaverse, and I'm going to make another one of the risk of not running a DAO. I mean, as regulation increases, it has this kind of opposite effect, actually, in that if you're running, if you're starting up a crypto platform like Boson Protocol that at scale could, hold billions, potentially, our aim is trillions of dollars worth of value in its sort of smart contracts, then you just can't bear the risk of not running a DAO, right? There is a mandate to decentralize that organization because the aim of such organizations is to is to be, to a degree censor resistant. And so not running a DAO is the risky thing. And of course you need to know how to run a DAO and be up to speed with the latest regulations. And in that regard, we're really fortunate to have the likes of Dr. Primavera de Filippi, who wrote Blockchain and the Law, and a couple of other legal blockchain experts on our advisory board. But I think increasingly the question is, you can't afford not to be decentralized as the sort of arm of the law sort of extends towards Web3.
Is it time for the government to get involved, or is this too early, or should they just kind of keep their hands on the taxation issues and kind of the infrastructure side of things, or should they get involved in the governance of these protocols as well? That's the way they are involved in the governance of companies. Chris, what do you think?
I think we're a long way away from that happening, and the governments are still seeing this in a sandbox environment, how it's going to play out. I think that governments will find it very difficult to get involved, and how these DAOs are being structured today. I'm sure there will be some regulation written, which will, but it'll need to be fundamentally different to how it's been written to govern centralized companies. I'm no lawyer and no expert on that, so I'm not going to comment too much. From a user perspective, though, where governments will look to protect users, and looking at the roles of government agencies that protect end users, that is something that we'll see impact and see how this is going to play out. And the one risk that we've got is there is a close correlation between cryptocurrency trading, and gambling. And when we start to see, uneducated, unexperienced members of the public, buying significantly inflated NFTs and buying cryptocurrencies and being then, financially hurt, that's where it's going to put a lot of pressure on regulatory bodies and governments to get involved.
Yeah, definitely. It's almost like the risk of not getting involved, as Justin said, is super high, but at the same time, the risk of getting involved if you're not properly equipped is the other question mark there. How do you bridge the two? How do you help people kind of ease into it, even though it's an easy on-ramp now? A lot of knowledge has to come with on-ramping into this ecosystem. It kind of takes us to the last bit of questions, which is around trends. I'd love to hear from you, Justin. What do you see coming up in 2022? Like, what are the key drivers to the metaverse's growth? Is it kind of educating the public on how to make the best use of it? Is it kind of larger commerce companies making an entrance and kicking off their commercial activity? Is it the government trying to squeeze their foot in there as well? What do you think are the major kind of drivers of change in the metaverse this year?
I mean, there's a couple of, one is definitely the metaverse becoming a place like, we just see this whole kind of metaverse commerce thing is just this huge sort of tsunami of adoption that's just come. We're involved in things like we're one of the main kind of exhibits in the fashion festival in Decentraland in March, and it's like chalk and cheese between a year ago in terms of interest and adoption, completely kind of oversubscribed. And I think it's this, whereas maybe the second half of last year and last year was all about kind of digital assets, it's now digi-physical, and this kind of blending of the metaverse and the universe into this sort of this omniverse. And yeah, I mean, it's great to be sort of positioned, connecting the two, and I think it's just going to be an incredible year for adoption along those channels.
What are some of the adoption hurdles that you could see pop up as we get through the year? Is that kind of just the infrastructure not being able to hold up all the individuals, number of projects being overwhelming?
Scalability and UX are the are key, and they have been, and there's lots of progress happening, but previously there wasn't the demand to overcome those barriers. Now there's just enormous demand, and I guess it's my analogy I use is like there wasn't massive demand to get a COVID to get a vaccine produced within a year until COVID came along, and similarly, it's amazing how much progress can happen in a short period of time when there's a massive incentive to do that, but those are still, everything we do is about scalability and user experience, because those are the two barriers that are holding back some of this tide.
There has been a lot of criticism, especially around the usability, the UX experience of a lot of these games. Chris mentioned Axie Infinity and some of the gaping holes in the user experience of that game, especially because it doesn't feel very much like a game that's very fun for kind of a Western user. It feels more like a utilitarian experience of engaging with something that's supposed to make you money. Chris, in kind of your work, it seems like you spend quite a bit of time on product and product design and how they might work. How do you look at user experience, and how is it different in the metaverse versus just the old standard computer game that we might have had previously? How do these two modalities interrelate, or how are they different?
So I suppose we see it as a world of metaverses. It's been defined as the metaverse very much, but when you actually break down what the metaverse is, we're looking at, you've got closed metaverses such as Facebook, Microsoft have been developing these worlds to benefit their existing user base, to drive value for their existing shareholders, versus these open metaverses, which very much the Sandbox Decentraland, which is building opportunity for the community to benefit from building in, developing their own commerce and benefiting, and very much Justin and Boson Protocols focusing on creating tools to enable that to simplify the process and happen. You've then got the these play to earn gaming experiences, which are very much similar to their existing gameplay that you're experiencing on mobile applications, but they're integrating Web3 elements, which then creates the players become digital assets, which become NFTs, which can become tradable, and value can be built up within the game, which then can be traded. So what we see is there's going to be the stepping stone approach of the billions of gamers that are hyper casual gamers that are used to opening up their iPhone, Android, and playing these games, start to understand and interact with these digital components and NFTs through an existing experience that they're very much used to, really, with the only change being then holding digital assets, connecting wallets, and that really is going to be a good educational gateway to the next stepping stone. And the other thing is AR, and we talk about metaverse being full VR, but there's this AR and what Justin mentioned, the Omniverse, or what we're seeing is this is the gateway to the metaverse in a way where you can use your existing devices to overlay augmented reality experiences, which can be NFTs, which again can interact with your wallets. You can handle digital assets and NFTs, and really we see that they're going to be the driving forces within the next year, and the areas that we're seeing real growth on, and that's going to become a really good gateway to bring people into this more fuller metaverse experience, which is more towards these VR worlds that Mark Zuckerberg very well illustrated on his video not a few months ago.
Fantastic. Yeah, absolutely agree with that. There's one large aspect of it is this new folk that's coming on board and is trying to explore and kind of also make this world their own. I'm sure it will change quite a bit once the masses really have started adopting it and they have certain kind of feedback that we're just going to have to change the existing infrastructure based on their thinking and how they interact with them. I'm sure there's many ways that they interact with the metaverse that we had never anticipated kind of as designers of that world. Maria, if you had $1 million, or make it $10 million even, to invest in certain projects in the metaverse, where would you place your bets today?
To be honest, in what three Spanish banks are trying to do. I don't know if you read the news of some few weeks ago, but the largest three banks in Spain, La Caixa Bank, Santander, and BBVA, are exploring the metaverse to see how, which products they can sell through the metaverse. And I think this could be a game changer if they do so, because as you know, these traditional banks are being challenged by neobanks. So this could be their only one opportunity to make it. I think it's interesting, because it's kind of, imagine some few years ago when neobanks starts, and a lot of investors, they put their money, they believe in this project. Others thought they were crazy. The same with Bitcoin and other cryptos some few years ago. And now, who could imagine that traditional banks are making their move too? And why not? If they make it, imagine they can get connected with a generation that today really doesn't interact with them. And even though in the future could even interact with Generation Z, from in a very subtle way. So I would bet, in terms of, traditional sectors, those, and of course, always at the same time in some specific DeFi projects. So that's mainly that.
Makes sense. In terms of things that in this kind of, Justin, go ahead if you want to say something.
Yeah, I mean, I was just going to say that I think investing in the kind of the basic infrastructure upon which this whole new economy will grow at this stage is a really, really good bet. I mean, I'm also a partner at Outlier Ventures, and they have then massive exposure across, so many different projects that are starting. And so, and equally, I think, some of these sort of index funds are also, good ways to get exposure there. But I think just investing across that space in projects that have got kind of, the unicorn potential is the way I would and am placing my investments.
And that's kind of the beauty of it as well, is that at the moment, it's no longer where you have to find a project, invest in a project individually. You can start indexing across altcoins that are often connected to many of these projects, just literally straight out of your Coinbase account. And I think that's becoming more and more publicly accepted to just be part of the game, whether that be as investor or as a partaker in the actual end activity. Chris, what is something that you think we should have talked about we didn't get a chance to touch on yet? Something that you think is important that we walk away with when it comes to the metaverse?
I think leading on to point Justin just made of the infrastructure is key. If the whole of the metaverse DeFi projects are all hosted on the likes of Amazon's AWS, and that goes down, or there's a centralized one route of failure, that then starts to become demystify, make a lot of all the promises of building decentralized products and solutions, a huge single point of failure. So we're really interested in the infrastructure layer, which is going to be driving and supporting all of this. Companies, we're back, interesting one, Kudos, that's creating a decentralized compute network that then can be powering a lot of these new worlds. We talked about storage as well being key, and we get a lot of exposure to a lot of these types of projects and companies building some really interesting solutions. I think we've covered quite a lot of this world, or this brave new world that we're heading into. There's obviously a lot more that we can talk about, but I think at the moment it's just so hard to keep up, and anyone in this space will agree, kind of waking up, there's so many new projects, people building new economies being designed, models of attracting new users being designed and tested, some failing, some succeeding, and really, from traditional business point of view, having a critical point now to start understanding this Web3 world, and understanding how they can be relevant in this world. Maria touched upon banks showing a lot of interest. Well, it's a little scary for them because a lot of this infrastructure being built is to not design the requirements of having a bank. So, what role do they play in this future is still to be defined, if any. And really, where we see lots of experiments, lots of testing and learning. There's going to be some big winners and also losers. And regulation is still to come, and will help protect a lot of areas of this market, and hope it doesn't hinder and stop progress. So that's the kind of my overall summary.
What do you believe would potentially affect this? If you think of because a lot of the money is still coming out of TradFi to invest in this universe, and let's say this year there might be an end to quantitative easing, and purse strings might get tighter after this kind of COVID-esque rally that we've had, and even kind of the crypto market has cooled a bit, or is quite choppy going sideways. What do you think the access to capital is going to affect this? Is money going to keep pouring into this space kind of almost semi-blindly just to fuel the sheer creation of projects, just as somewhere to deploy capital in the first place? Or do you think that the choppiness of the current market and the potential of it being like this for the next 6 months or so, how do you think it's going to affect the metaverse and how it progresses? Justin, go for it.
I think, there's this sort of like tidal flow of backwards and forwards and creating like kind of, crypto winters and volatility and crashes, etc. But overall, the macro flow of value is from traditional finance to this, decentralized finance ecosystem that's growing, and metaverse being a manifestation of that. And I think if you look at traditional finance and the economy and these kind of like long-term and potentially unsolvable problems, the whole kind of decentralized finance ecosystem has the potential to kind of be the sort of antidote to a lot of that. So my view is that over a period of years that value will be locked into the decentralized finance ecosystem, because inherently its properties are more reliable, more secure, and less subject to the whim of politicians. So yeah, I mean you'll see this kind of volatility, but there's a very, very clear kind of direction of travel of this transfer of value from one system to what is a fundamentally better system for storing value that cannot be kind of inflated away, for example.
Maria, what are your thoughts, closing thoughts on that? Because I think Justin made a really good point there on the shift of value that just cannot be stopped. It's a bit more of a tidal wave that's going in one direction and you can't really undo. What are your thoughts on this ecosystem? Do you think that the capital markets and finance in general will affect it, or do you think it's kind of an unstoppable train that's already on its way through?
First of all, capital market needs to understand that we are in front of a different kind of assets, and they have different characteristics at the same time, because that's the problem that we have now, especially with everything, with regulators, when they want to impose taxes and whatever. And the same, finally, is the same thing with the capital markets, because they have to make decisions. But I also think that, in some specific cases, they can also help the capital market. I mean, at least the economy. I don't know if you know the case of the VIR. The VIR is it's a payment system that was designed in 1934 in Switzerland, a small, geography in Switzerland, in a moment of that the economy was not really in their best moment. And I would say that this kind of, payment system helped to keep going I would say the economy, and actually it helped. It works anti-cyclical, and literature says that some specific this kind of payment system or tokens in our, I would say, language, if they're designed for specific topics, they can also support and solve certain issues, because then you can have two different monetary systems, complementary, some of them that make you compete, others that helps to solve these particular issues. And we have seen cases like this in other economies. So they affect, but they affect in different ways, depending on how many users do you have, on the design of that token or crypto or coin. But also to wrap up, I want to go back on how to choose where to invest, because what happens, and now we also need to understand that there's also some trends on new generations that they are not as loyal as they were other generations. Other generations, they keep being in one platform and they were very faithful to one platform. And as Chris mentioned, go from one metaverse to another, it's very, very easy. Like having different neobanks at the same time is very, very easy. And you use the credit cards that have a better offer in terms of reward. So I think that also that's why we need to understand when we make the decision and we want to have unicorns, we need to understand how the consumers are changing their habits to really, find that specific, investment that will make you very, very happy in some years after.
Beautiful. Yeah, I think there's a lot of hope that is happening here in terms of unlocking the ability for individuals from such diverse backgrounds to unite in a single space that's not really defined by time or economic status. Of course, if you can hang your own very expensive NFT in your own very expensive plot of land in the metaverse, that's again a status symbol, but I think it really opens the door to a lot of economic activity and social activity that really wasn't available previously. Really, thank you so much all for sharing your thoughts and your wisdom, your insights. I think one of the key bits I'm taking away today is the biggest risk of the metaverse is not being in the metaverse. A little bit like the Fight Club. We'll learn one of the Fight Club, but don't talk about the Fight Club. It's kind of the opposite here. Definitely talk about the Fight Club. But I really appreciate everybody's time and effort that you spent in sharing your thoughts here. And I'm sure that anybody who wants to get in touch later can look you all up on LinkedIn and kind of keep the conversation going after. Thank you so much.
Thank you.
A pleasure. Bye-bye.
Bye.